What's up guys, welcome to our weekly spotlight, where we bring to you some of the most notable news within the last 7 days that you might not want to miss. And now let's jump right into it and see what came out this week. The first piece of news will be from one of the world leading powers, Russia. A national ban on the use of the digital asset for payments was today signed into law by Russian President Vladimir Putin. After much discussion on how to handle cryptocurrency, the Russian government and central bank finally took actions. The Bank of Russia recommended a complete ban on cryptocurrency for payments or investments back in January. The law today doesn't really go that far. Similar to the bill passed today, the Russian Finance Ministry proposed cryptocurrency restrictions in February that permit investing in digital assets like Bitcoin or Ethereum, but forbid using them to make purchases. Apparently, the head of Russia isn't really fond of too much crypto integration into daily lives, and it would seem that some important figures of the ACP share the same viewpoint. In a new paper arguing for a digital euro, top officials at European Central Bank noted that cryptocurrency are not an effective form of payment, and stablecoins are susceptible to runs. The project administrators have identified several goals, including giving Europeans easy access to central bank money in a digital age. Financial stability is dependent on maintaining access to central bank funds as payments move more and more online, according to Christian Lagarde, president of the European Central Bank, and Fabio Panetta, a member of its exclusive board. The digital euro can do that. In a piece posted this week on the bank blog, the high-ranking members of European Monetary Authority expect their support for Europe's Central Bank Digital Currency (CBDC), noting that the successful paradigm for payments that endured for many years is now under threat. Next up, we have some information regarding the world's richest man and the key supporter of Dogecoin payment, Elon Musk. Unlike the big names mentioned above, Musk doesn't really seem to mind crypto payment at all, but his company Tesla recently dumped a great amount of Bitcoin. The CEO of Tesla provided an explanation for the company's decision to sell 75% of its Bitcoin holdings, which were valued at $936 million during Thursday's earnings call. The reason we sold a bunch of Bitcoin holdings was that we were uncertain when the COVID lockdown in China would alleviate, Musk said on the call, so it was important for us to maximize our cash positions, given the uncertainty of COVID lockdown in China. Tesla relied again when it converted the majority of its Bitcoin holdings to fiat, the business said on the call. This resulted in $106 million cost to the P&L profit and loss that was tacked onto the restructuring costs related to deliberate workforce reductions. Another not-so-good news about the relationship between a nation and crypto. Specifically, the Netherlands bank DNB, the Dutch central bank, announced on Monday that Binance Holding Ltd has been penalized for providing cryptocurrency services without registering as required by law. The DNB explained that an administrative charge of €3.325 million, equivalent to $3.4 million, was imposed on the Bitcoin exchange on April 25, adding, the fine was imposed because Binance offered crypto services in the Netherlands without a legally required registration with DNB. That's prohibited. According to DNB, Binance received a Category 3 punishment, the highest level of enforcement available from the central bank, due to the gravity and degree of culpability of the non-compliance. The regulator emphasized that the DNB viewed Binance's violation to be very serious, and mentioned that the breach occurred over a prolonged period, from May 2020 until at least December 2021. And to conclude the list of this week's highlights, Binance has announced that this giant global business will not be offering stock trading. No matter how many additional users will bring in, Binance isn't interested in offering equity trading. On the most recent episode of the GM podcast, CEO Changbin Yao, CZ said that while cryptocurrency exchanges that offer the service are neither right nor bad, swapping equity is contrary to the company's guiding principles. Some cryptocurrency companies are focusing on attracting new customers with new features as they struggle with the general market fall. Customers can now trade equities in accounts paid with stablecoin thanks to FTX, which started doing so in May. However, CES stated that he would prefer to see Binance concentrate on creating more Web3 products, discrediting the fact that stock trading has shown to be a lucrative sector for numerous retail investment platforms, such as Robinhood and Wellboo. You guys, that's all we have for this week. These are the news from all over the world in the week that we compiled to give you a general idea of what's happening in the cryptocurrency industry. There isn't much for me to comment on, but one thing is for sure, the expansion of crypto in the world is and will be facing numerous obstacles. But it's a good thing that the country are making sure the use and the power of crypto doesn't get out of hand. If you find this interesting, you can always check out our daily news at bearme.space, where you will see crypto updates every day. Thank you for your support.